Alright, so today we're gonna cover something about how to spot a trade and how to go about finding the entries and for short and for longs. That could be specifically both, and just gonna go through the thought process behind a trade, specifically for higher time frame, and then I'm gonna cover lower time frame as well. So for higher time frame, just gonna take a random chart. mm, let's take XRP. So first of all, we're gonna cover swing trades. So for that, we are first of all gonna go to the daily chart, and first thing we can see that, seeing the PA, we can conclude that this is bullish PA, just because we had ranging throughout this region over here, and then we had a breakout. Now after it has broken out, you need a retest, and you're just simply gonna bid the retest on these setups. So first of all, open up a blank chart, and you're gonna need your region of support turned into resistance, which is where the breakout happened and where it could retest in the near future for your long position. So just by taking a general look, you can say that there was a rejection over here marking resistance, this whole area failing to break out due to these wicks around this area, and then a wick around this area followed by a wick retest with this whole bullish P around this region, concluding that this whole region from here towards here is your first indicator that this is where the breakout happened, and this is your range which could get bid in the future for a retest. As you can see over here, it came down, but it did not came towards this whole area of support for retest. Instead, it bounced from around here. Now if I draw a box from this region towards this region, we could say that this was another minor support, resistance turned into support round about for these levels and for these levels, and then this over here, the most recent resistance which got turned into support. So that's two regions. First, I'm just gonna delete this one. I'm gonna go with the follow one, because this is what I would actually wait for while I'm gonna take this trade if I'm gonna place any limit orders in this area. This is your first range, but this is like, you could say, a diverse range, and there's a possibility that price could come at this level and just simply bounce, or it could simply reverse without retesting your region of interest. So for that, you're gonna start to minimize your region of entry. For that, the first thing I do is start drawing fibs. So I'm gonna take the swing low over here, I'm gonna take the swing high round about this top over here, extend it a bit towards the right so that I can see where the fibs are extending. And let's just prices. Okay, these are the major fibs. No, not prices. Wait a second. Levels. The point 0.5, the 0.618, and 0.76786 Fibonacci. So now you got the fibs. You can either keep the fibs over there, or you can mark with these horizontal rays like these. The first here, second here, and you don't actually need this one because this is really far from your area of interest. The two overlapping fibs within your specified range where you are supposed to take an interest in a long position are these two. Now this was your most you could say oldest swing low towards the swing high. Then you're gonna draw another fig from your most recent swing low towards your most recent swing high. It could be here, but I would like to take it from around these levels, or you could even take these levels. It doesn't really make a difference, because with swing trades you're not sniping levels, instead you're going to be looking for DCA ranges, so there can be a little bit of differences while drawing your fibs. Then you can see that you have a 0.618 Fibonacci over here. The point 0.5 Fibonacci perfectly lines up with this area over here as well, which concludes in some way that the other fibs are valid as well. Now that if you've got your fibs, you're gonna just delete your fibs, and now you have three specific levels for Fibonacci's. Now what you're gonna do is you're gonna draw two separate regions. The first one is gonna be this area with two overlapping fibs, and second could be your other overlapping Fibonacci area, which was this one combined with this fib over here. Alright, you got two areas. with fibs lined up and SR flip regions. Now this is a whole SR flip region, but again, like I said, you cannot use such an entirely wide region to position yourself because the RR of the trade would be very low in that case. Now next, what happens now, second step is finding the POCs. You can drop range POCs from here to here. It's gonna come around these levels, yep. And you can draw another one from this range towards the high, which comes around this level. So you have another confluence over here with this wick here, and you can mark it as POC, that you have a POC lining up here as well. Then you can delete this, and then comes with the help of the indicator I have, beam levels. You can go in here and you can turn on your previous day, week, previous week, monthly, previous month POCs to automatically draw them for you instead of using this manual tool. Or you can use the PVP indicator. This is on the paid version, that would also give you your POCs. Now another confluence with this PVP indicator is that you could see over here that you have a lot of POCs lining up over here. There are 3 different POCs. So what you could do is you could reduce your reduce this one, reduce your long region like this. Now this overlaps your fib. You have a fib over here and a fib was over here. This is one region of long, and now you had another fib over here, and you have a POC over here with another fib that was previously over here, which we drew with the Fibonacci tool. Now you've got 2 regions, 2 long. Both are valid, but now comes the important part, which is lining up your setups with the BTC supports. Since this is a long position, we are interested in taking longs. We are going to be monitoring this with BTC supports. So what I do is I set up a line like this, white with a dotted, and I set an alert crossing down for this one, and then I'll set another alert for crossing down with this one. Now what happens when the price will start to pull back? It will trigger an alert in some sort of area. Either first of all, it's going to trigger over here because that comes first. Now let's say this price tag gets triggered with the alert on XRP on this box, and we go on our Bitcoin chart and we see that Bitcoin is trading at 20,300 resistance. Now the first thing you're gonna do is you're gonna wait for XRP trade, and you're gonna see how it reacts on that support. Let me just add it, XRP USD. Okay, it comes towards the support like this. Let's say just came over here like this and triggered this alert. Okay, now Bitcoin is at resistance. You cannot take a long position on an altcoin with resistance. What you're gonna wait for is, since we drew it on the daily chart, we are gonna come on the 4-hour chart and we're gonna wait for consolidation. We are either gonna wait for consolidation, or we are either gonna wait for Bitcoin to break 20.3k level, flip that level, and then XRP would also be flipping this level and then trigger the position, something like this. The other way around this thing is that since that alert is coming on resistance, you're gonna wait for the second region. Now it pullbacks more and BTC is also pulling back. Let's say BTC comes at 19.8k levels like this, and it bounces or starts consolidating. Okay, then you have XRP comes towards this region over here and starts consolidating, bouncing. Then just without waiting for any further PA, you can just trigger the position on XRP with the Bitcoin support, because both are lining up. Bitcoin, if only if the condition is if it is at a major support. It cannot be like any random support. It has to be a major support to time a position without waiting for any further PA. But if it's like a minor support and it's an undecided level, such as today we have the Q3 close, so we aren't sure where PA is gonna head, so we are gonna wait for either consolidations or we are gonna wait for flips, higher highs to be put, and then we can trigger a position. That's it for higher time frame, how I spot the setups. The most important thing is setting up your SR flip regions, and then setting up alerts on them, and then timing it with BTC supports for longs and BTC resistances for shorts. Now let's just take this chart again and go on lower time frame. Now the lower time frame typically starts from for me on H1 and it goes to M15 and M5. M5 is pretty rare for me to go towards, but M15 is the most used time frame for me on lower time frame scalps. Okay, so first of all we came on the lower time frame. First of all, I'm gonna tell you that for lower time frames I use my own indicator a lot because it marks the range value area high, POC and low with the Monday ranges as well, so it makes it easier for me to see the overall PA. What I can deduce from this is that we had a deviation under the Monday lows, we rejected the Monday highs over here, and we are currently trading slightly above the POC. Now what's the thought process behind scalping on the lower time frame? First of all, I say that okay, BTC is coming towards a major resistance. I'm gonna look for a short on XRP. Why I'm gonna look for a short on XRP? Because look at this BTC PA, okay, this whole PA, it's just up up up, while XRP is barely going up. That's my first conclusion, that I am seeing weakness. Another better example is RSR over here. Look how BTC was going up, but RSR in this current position is going down. I'm gonna cover RSR shortly. Let's just take XRP blank chart. So first I'm gonna turn on my indicator. Okay, before the indicator I'm gonna mark the SR flip region again. So I'm gonna start looking for an area of interest where I could say that this could be a potential SR flip region. First of all, I'm gonna take like from here towards here, I'm gonna draw this. I'm gonna say this is the SR flip region, and I'm gonna add confluences to it. How? First of all, I see that acceptance above this level, we had this whole pump up, then we had some sort of deviation around here, failed retests, SFP here, breakdown, rejections, reclaim and a pump, this whole deviation around here, breakdown, retest of the deviation and dump, and currently it is rejecting the resistance again as well. Okay, that's my first confluence that I have identified one SR flip region. Now let's say I'm also gonna identify another SR flip region, just because BTC is currently at 20.1k, but my chart says the major resistance is at 20.3k. So I'm gonna mark another SR flip region for the future in case BTC starts pumping to 20.3k. I have another area of interest marked for XRP to short. So I'm gonna take this wick and I'm gonna start drawing from here and come around these levels. Certain slight adjustments like these to cover some of the wicks and some of the wicks over here as well. Actually, let's just cover this whole one. Okay, now add confluence to the trade. Rejection over here, rejection over here, rejection over here, fake out above this level, which would have deviated on the lower time frames. And this is a deviation again here, deviation again here, again deviation. This is a triple deviation over here. This is an SMT as well. This is probably RSI divergence as well. If I turn up the RSM, and I'm gonna confuse you with that, it's most probably it's gonna be a divergence here as well, another confluence, and then acceptance towards the next range, a bounce over here, confirming these two range levels as well with this certain bounce over here. So we have got another region marked for us as well over here in case BTC starts pumping to 20.3k. Then we are going to add the beam levels indicator. We can see the D value area high is also lining up with this. The POC is slightly towards this box, but if the POC reclaims, we can expect a pump on XRP towards the next levels. Okay, so we have got another confluence over due to the value area high, and now we are going to look for Fibonacci retracements. We are going to take this first swing high towards this swing low, and we can see that the first major fib of 0.5 is lining up into a short region. This is another confluence. Alright, and then we can look for another, okay, let's say that this is our swing high over here. Alright, and this is our swing low. Now from here to here, this is another range, and from here to here, this is another range. From here towards here, we do not have a lower time frame breakout play happening. But if we go towards here to here, we can say that this is the trend line, this is the trend line breakout over here, this is the resistance, and if it flips, it pumps. So we are kind of unsure towards this resistance from turning bearish on us, because BTC is also not at the levels we ideally want. So we are gonna wait for the price to come towards these levels. Now something you would notice is that another Fibonacci of 0.786 is slightly above your uh, previous Fibonacci which you calculated from over here. But this Fibonacci of zero point 0.5 is more heavier compared to your Fibonacci of 0.786 over here, just because your range is slightly bigger for that Fibonacci compared to this one. But you can use this Fibonacci to your advantage. How? Because you're gonna take a short, you're gonna place your stop loss somewhere. What you can do is you can place your stop loss right above this 0.780 Fibonacci candle wick over here, and you can target your next Fibonacci over here for roughly a 2.4 hour short on the 15-minute chart. So you have to use your Fibonacci's, your ranges, and your take profit targets, which whatever you'll set in confluence to your SR flip regions, and finding your stop loss as well. Finding a stop loss does not mean that you have to randomly select a wick, because if I delete these Fibonacci's as well over here, I can show you that this is a rejection wick here, rejection wick here, here as well, here as well. If you want a slightly safer stop loss, you can place it all right above this here, but your RR gets reduced to 1.85. So for a higher RR trade, you would go with this 0.786 Fibonacci confluence wick over here as your stop loss. Alright, now we're gonna take a quick look at RSR as well, which I previously mentioned. Let's delete this. Alright, so first of all, the thing you see is two lines drawn on my chart. It is because I usually refrain from placing boxes like these on the lower time frame, because I like to use one line confluences to get better entries for higher RR trades, definitely for scalping only, such as this line wick over here and this range low and range high over here. So first a deduction is that since BTC is like up and RSR is like down, we say that RSR is currently under weakness. Second thing we have is our trend line. Third confluence we have is this head and shoulders pattern on the trend line, and the third is the range low confluence over here, which if it gets lost over here is your trigger to short it towards your higher time frame support, SR region, SR flip support over here. Now like I showed you on the XRP daily and H4 chart how you deduce the box of SR flip region, it is the same case for RSR over here, which is gonna turn as your take profit target instead, because we are shorting it from over here after it loses its structure. You could also call it a market structure break, and you could target this as TP1 and this as TP2, and then if it starts consolidating over here again with BTC at support, you could trigger along back to the range high which you shorted from previously. This would be your TP1, this would be your TP2, and if it breaks out, this would be TP3, TP4. It depends where you mark your levels overall. Let's just quickly check if we have some sort of Fibonacci's lining up. So let's say we take this swing high from over here. I'm considering this one because this is the SFP. I do not like to consider SFPs as my swing highs. I could consider this one, but this looks better over here for this whole range. I take this one towards this one, and we have our Fibonacci's over here. Well, let's say if it pumps, I'm gonna short this level. I can have this whole region, this is my range high and this is my 0.5 Fibonacci. I can short this whole region with DCA, or I can just short this former range high key level and have my stop loss. Now there's two takes towards stop loss. One, you can either have it above the next Fibonacci, or which I do not like, is the reason is because if it goes through the stop loss, it's gonna reject at this Fibonacci. Okay, it makes sense, it would if it is a key Fibonacci and lining up, But the problem is that is you could condense your stop loss lower, and let's say your stop loss hits, okay, you got stopped out. You can again re-enter over here. Let's say you are taking this short position over here, you have a 2.28 hour trade, you get stopped out, then you get take another short position. Just for confluence, if you use the indicator, you can see your Monday high as well over here. Let's just turn that off. I can take, let's say this one got stopped out, I'm gonna take another short. For that, I'm gonna ideally place my stop loss above this big eye over here, and I'm gonna target range low again. Now see the difference. We had a 2.28 hour short over here which got stopped negative 1 hour. We are re-entering over here again. Now if it hits TP, you make 3.57 hour. Collectively, if you lost 1 hour before and you made 3.57 on this one, you're gonna collectively come out in profit for the day at positive 2.57 hour. So with scalping, your ideal decision should be that your stop loss should be not so close but not so far, not so far in that sense that it becomes another potential entry in the future, but it should be far enough that you do not get wicked out. You can use the levels indicator, you can use the PVP indicator to look for any former POCs and put your stops above that. You have different things to look towards. Or even another great example is looking for stop losses is that, okay, let's say you shorted over here and there's too much noise on the lower time frame, there's too many wicks. What you're gonna do is you're gonna directly go towards 4-hour chart and you're gonna see the price action over here. Alright, you see there is wicks. You see that there is some sort of a major this wick over here. If I mark this wick, alright, I see that when the candle closed above this, it had a huge pump, and it had acceptance below this, it had a huge dump. So I have a key level over here. Then I also have this candle over here. This could be another key level due to this candle over here. You could say this is a lower time frame deviation on this level over here. If I go lower, I do see this deviation happening, liquidity getting run over here, deviation happening over here, acceptance below retest, and a huge dump. So I have two different confluences for this stop loss. Now I could say both these could be stop losses, but I want to be safe. So what I'm gonna do, I'm gonna look for the next wick after that. That could be this one, but this looks like an SFP as well. Why? Because pumped, wicked huge, came back below this former wick which we initially decided we could place our stop loss above. So I'm gonna lower it towards, we can place our stop loss over here, we get a 1 hour trade, or we could place our stop loss above this, above this, yes, and we get a 1.23 hours trade. So you have both these levels for stops, you just have to place it somewhere above that. You could also do it over here because this is the support and resistance as well over here. You have this whole area of SR flip on the lower time frames over here as well. Look how clean of an SR flip is that. Rejections, retest, dump, reclaim, pump, breakdown, dump, SFP huge, failure, dump again. So you could just slightly place your stops just like that, and you could come out with a 1.23 hour trade. And I want to cover another thing about the order of trades. Some people say that 1 hour trades are not good. I would advise you to go through my educational thread at SSR server, or my Twitter. Go to Twitter, search crypto beam opportunity cost and RR, and you'll understand what opportunity cost is and what I'm trying to say. BTC is dumping right now. Let's just take a quick look at our XRP short setup. So look, we had a perfect rejection from the levels we marked on XRP. BTC did not go to the levels I wanted to short XRP from, so I did not take this trade. It's not just that I'm recording this video, I couldn't take this trade. If it had lined up with BTC, I would have logged into Binance right now and taken a short position, but my confluences were not there. I was more interested in this area than this one, but this could have been a short. after all the confluences with Fibonacci's and beam levels, indicator, and PVPs, everything that we made. So that's it for the spotting the charts setup. What you want to remember is that for higher time frame, one, you need the daily or the 4-hour charts. Step one, identify the SR flip regions. Step two, combine Fibonacci's with it. Step 3, add POC levels to it. Step 4, use the indicator I have made to add further confluence. And step 5, which is an additional step, look for RSI bullish or bearish divergences in your area of interest if there are any happening. There is the RSI divergences indicator by domain whatever it is, and it marks your divergences automatically. So you could add confluence with that as well if other confluences are not enough. And for lower time frames, all you want to do is repeat the same thing, but be careful with your stops. The idea behind lower time frame scalping is that you want to be looking for more quantity of trades and high RR trades, so that if you get continuously stopped out, you can make it back with another trade because you are performing high RR trades, and you can always make it back. I'll just show you a little bit from my server. It's that, okay, a 5.17 hour scalp, mm, XRP 4.2 hour scalp. So I've been scalping like this whole week. You can see it on my Excel sheet here as well, which I've posted on Twitter. You can find it on my Twitter as well. The notes are there for the trades as well on how it's done. The RR achieved is also seen. I've also mentioned swing, intraday, scalp, and you can see the differences in the RR of these trades and how diversified risk management helps between keeping your swing RR setups low but risking more money on them, and keeping your scalp RR setups high but risking less money on them. Specifically talking about this thing over here. Scalps 1 hour is $100 for day trades. My 1 hour is $500 for swings. My 1 hour 1 hour, which represents 1 hour risk. In case stop loss hits, I'm gonna lose negative 1 hour, which is equivalent to some sort of a monetary value I have set for myself. You can see that this for the scalps it's pretty low, because for scalps I'm targeting high RR setups and continuously trading them, finding setups after setups after setups, not bothered about if I'm losing because I know I can make it back. So I'm just gonna sum it up for this video once more if you did not pay attention before. For higher time frame setups and lower time frame setups, the idea behind them is the same for me, using Fibonacci's, POCs, my own indicator, PVP, and SR flip regions most importantly. But with scalps is that the most important part comes towards adjusting your stop loss such that you do not get wicked out at most obvious regions, but you also manage to make high RR trades, not in percentage but in RR wise. It could be 1% take profit with 0.5% stop loss, that's a 2 hour trade, or it could be a 5% take profit with a 5% stop loss, which is just a 1 hour trade. Just place your stops conveniently and look for high RR trades on scalps using the same strategy as swings. That's it for how what my thought process looks behind spotting a trade and carrying it forward. And I'll maybe see you next time in the future in some other video. Bye bye.